Hello students and welcome to the lecture. So students, as we know that we are covering the financial system, and basically in the financial system what we are studying the non-banking finance companies. Okay, and some places you have also read it as an non-banking financial corporations, right? All right. So it doesn't matter whether it's written as non-banking finance company or non-banking financial corporation. It doesn't have to do anything with the meaning. But the main thing is that remember it is an organization which is allowed to grant loans, but not to accept deposits. Okay. So remember this thing. These organizations are those organizations which are basically you can say allowed to grant the loans, but they are not allowed to accept the deposits. Got it? So that's why these are known as the non-banking financial corporations. Okay. So these were the topics we had selected for the discussion in this series. Like we had started with an introduction. Okay. And we were discussing the credit intermediation in the, you can say, in the previous lecture. All right. It means that now we are left with the asset financing, housing finance, microfinance, investment and wealth management. Okay. Infrastructure finance and the conclusion part. Okay. And somewhat we are left with this topic also. All right. So basically, before start this lecture, we should do a quick revision about the credit intermediation. Okay. This will be a very quick revision about it. All right. So basically, if we talk about the credit intermediation, so suppose this, you can say this is a bank. All right. Here are two kind of parties. This one. All right. This one is a depositor. All right. This one is a loan holder. Okay. And this is the flow. All right. It means that the person who having the excess amount of money will deposit the amount with the bank. Thereafter, the bank will grant out this amount to the person who is in the need of the money, and the system works. So here you can say the bank is the intermediary. All right. And why the bank does this kind of things? Because the bank pays some interest on the deposits, get some interest from the loans, and the interest value is the bank's income. Got it? So remember this thing. All right. Thereafter, if we talk about the non-banking financial corporation or NBFC also. All right. So here are two persons also. The first is the loan holder. All right. But here the things are little bit different. Okay. Unlike the banks, the NBFCs are not allowed to hold the deposits. All right. So what they will do, they will generally grant the loans to the loan holder as usual. All right. And basically they use their capital. Okay. They use the refinance sources. All right. They use the, you can say, public debt in order to provide the credit facilities to the loan holders. All right. It means that here also it is an intermediation, or you can say credit intermediation. Why? Because this side is in excess. Okay. This side is in deficit. Got it? So that's how the things work. All right. So now I hope you have got an idea about it. Let's move forward. Okay. Like in the previous lecture, we had discussed about this one, understanding undeserved markets. Okay. We have discussed this particular topic. So we will start from here. Innovative credit scoring. Like, what do you mean by this? They often use alternative data and the technology driven assessment tools to evaluate the credit worthiness of potential borrowers. This could include using algorithms that analyze payment history for utilities, rent, and even social media behavior. Alright, like you can say, suppose if this is in business, okay, this is in business. Alright, so every business holder, or you can say every person who is somehow related to the economy, will have to answer the three basic questions at some point of time. And what are these three basic questions? So these three basic questions are: what to produce, whom to produce, how to produce. Okay, these all are the three basic questions of any business holder which is required to be faced off. All right, like what to produce, what kind of goods and services the business should produce so that they could acquire a maximum product, you can say market share. Okay, whom to produce, like who will be there, you can say potential clients who will buy their goods and services. Thereafter, how to produce, it means that once the things have been final, like how they will be produced, like what are the resources, what are the ways and techniques which would be, you can say, employed to produce that particular things or items. Okay, similar things happen with the NFBC also. Or NBFC, sorry. Okay, non-banking financial corporations or non-banking finance companies, they also a business. All right, so that's why they are required to face these questions by themselves. Like what to produce, it means that whether they are required to produce the short-term loans, okay, long-term loans, all right, lease agreements, hire purchase agreements, and all right, about them we will discuss in this series in the further lectures. Okay, thereafter, whom to produce, like who will be their target audience. For example, you can say, suppose if there are total 100 people in the population, okay, so here we required a market segmentation, or you can say division of this particular series. Like you can say, out of these 100 people, 10 people are of high class, okay, 50 people using traditional banks. Okay, so how many are left now? Only the 40 people. Okay, so now the NBFC will target these people. All right, or you can say these people in the particular way, not all of them. Okay, so why I'm saying this? Because if you look at the dynamics, or you can say the demographics present in front of you, all right, what we have studied in the learning of this particular series. Like the NBFCs are generally work for the undeserved or financially excluded sector, right? That's what we had discussed. So if you look at this picture, okay, so here we have the graph of the 100 people, but out of these 100 people, are all of them in the list of the financial excluded or the undeserved ones? No. Here 10 people 10 people are belong to the high class segment. Okay, 50 people are belong to the traditional bank services. Okay, so only the targeted one, which are the part of undeserved or the financial excluded sector, is only 40 people. Okay, so instead of making planning and employ the resources for the graph of 100 people, they will go for the 40 people. All right, so this is the picture. Now the question is, how do they find out that who to produce the services? All right, like what are their clients and all, and how they will be able to classify or bifurcated them? How the things would be done? Just think about it. How the things would be done? The easiest way of doing this is analyze the payment history for utilities, rent, even social media behavior, because this is generally, you can say, highlights way of spending, highlights way of spending and human behavior. All right, highlights way of spending and human behavior. Okay, so remember this one, innovative credit scoring. Got it? Now, product specialization. NBFCs frequently developed the financial products tailored to the needs of the specific industries or sectors. For example, an NBFC might specialize in financing second-hand vehicles for providing loans against a property to the SMEs for business expansion. All right, like you can say, after finding out the questions for three basic, after finding out the answers for these three basic questions, like what to produce, whom to produce, and how to produce, what will be the next step? The next step will be designing layout for goods and services production as based on the research findings. Okay, designing layout for goods and services production as based on the research finding. All right, because when they will do the research and they will try to find out the answers, what they will get? They will get the data. Okay, and this data will be used for this particular purpose. Okay, so remember this one. All right, and as per the findings, they will develop the financial products which are specifically, or you can say, more tailored to the needs of the specific industries or sectors. All right, quick decision making. The organizational structure of NBFCs are usually more agile than those of traditional banks, which often leads to the faster loan approval process. This speed can be critical for businesses and individuals who require timely financial assistance. All right, Like for you can say understanding of this particular thing, we must require to deeply understand the banking and the NBFC structure. Okay, like this is the bank, this is the NBFC. So the bank generally have to deal with the depositors, okay, creditors, all right, or you can say loan holders basically. All right, thereafter the reserve requirements, okay, thereafter main functions, towards economy and all, okay. Whereas when we talk about the NBFCs, then generally they focused on loan holders, product as per needs, okay. उसके बाद less obligations and restrictions on them in comparison with the bank, okay. So there are two areas. If we talk about the banks, then the banks generally have to deal with the depositors who had deposited their amount with the bank. They generally have to deal with the loan holders who have taken the loan from them. Even they have to maintain the reserve requirements like the CRR, SLR, PSL and other requirements. Thereafter, because they having a huge consumer base, they having a very you can say significant role in the economy, so they have to be more careful for their main functions towards the economy, because any you can say wrong step by the bank may lead to the collapse of large financial structure. All right, whereas when we talk about the NBFCs, so basically they do not have to deal with loan holders because they are not allowed to accept the deposits, so that's why their focus is only on the loan holders, okay. They are generally not so, or you can say not so much required to maintain the reserve at the banks, so that's why they could focus on the product designing as per the needs. Thereafter, they are new concepts and even their consumer base is relatively small in comparison with the banks, so that's why they're having the less obligations and the restrictions in comparison with the banks, okay. So generally they are more allowed to make the experiments and innovations, okay. But these things are generally not available in terms of the banks, got it. So that's why their organization structure is more agile than those of the traditional banks because of these reasons, okay. So that's why one of their innovation and you can say the experiment is that they having the faster loan approval process, okay. For example, let me give an example, okay. Like this is you, okay, and now you are going to the traditional banks for the loan payment of rupees 2 lakhs, okay, for this one. So what is the procedure of this one, okay. However, it is you can say different from bank to bank, but I am going to provide you a common picture. Like first is the documentation, not documentation, application. Thereafter the documentation, okay, verification, cross verification, approval, disbursement. Okay, so this is the first thing. Second, this is you go to the NBFC. Okay, procedure, application, KYC, approval, and disbursement. Okay, so now just compare it. Okay, like first when you go to the bank, you have to file the application. Okay, after analyzing the application, they will invite you to submit some documents. Okay, thereafter the documents will be verified. Once the documents will be verified, again the cross verification will be done with some organizations from where you have obtained these documents. For example, if you are working, you are aware about the concept of salary slip, right? So if you are submitting your salary slip in the documentation, they will verify the authenticity of the salary slip, and then they will contact your organization from where you had obtained this particular salary slip in order to analyze that whether you are the right person or not, or you can say whether this salary slip is you can say reliable or not. Okay, thereafter, after the cross verification, they will give you the approval, and even after the approval, it will take at least 4 to 5 days for the disbursement. Okay, this is a normal flow chart of obtaining loans from the bank. Please remember, this could be differs from bank to bank, but generally this is a very common way. All right. Whereas if we talk about the NBFC, if you go here for the loan of 2 lakhs, okay, you are required to file the application. Thereafter, all your documents will be verified and submitted during the KYC. After finding out the authenticity, they will provide you the approval and disbursement. 1, 2, 3. 3 steps. 1, 2, 3, 4, 5, 6. 6 steps. Almost double. Okay. That is the way of faster loan process. This speed can be critical for the businesses and the individuals who require timely financial assistance. Got it? Got it? Collateral flexibility. Unlike banks, which generally have stringent collateral requirements, NBFC may accept a wide range of assets as collateral or offer unsecured loans based on the assessed creditworthiness of the borrowers. Like for example, suppose if this is a bank, all right, the person goes here, asks the loan for rupees 2 lakhs. Okay, and as we have discussed that the banks generally having the process of secured loans. Okay, so what is a secured loan and what do you mean by the unsecured loans? First, we are required to understand this concept. Okay, so remember there is only a very basic difference, like the secured loans are generally having the collateral backing. Okay, but the unsecured loans not having any collateral backing. Okay, this is the only difference. Okay, collateral means a particular thing or the asset the borrower is required to deposit with the lending organization If the borrower defaults to repay the amount which he had taken as a loan, the collateral will be sold off to the market and the amount will be recovered. Okay, so these are called the secured loans, because even if 2 lakh rupees would be granted to that person, and if he defaulted, the bank will sell out the collateral and secure the amount. But in the unsecured loans, there is no collateral backing. It's a backing, not banking. Okay. Backing. Okay. So it means that if the person defaulted, there is nothing to sell and recover the amount. Okay. So that's why the bank generally having the procedure of the collateral. Okay. So if the person reaches the bank and he asks for rupees 2 lakhs, the bank will ask for the collateral security. Okay. For the secured loans. But here also the banks having the norms which are known as the stringent norms. Like suppose you having the particular thing called X, okay, and you want it to be submitted as a collateral security, but the bank only accepts A, B, C, D, Y, and Z. The bank only accepts these particular items as in collateral. So what will happen? The bank will reject your collateral backing, and then your loan application will also be rejected. Okay, but when we talk about the NBFC, and if the person go there for 2 lakh rupees, so they having the two types of services available: secured loans, unsecured loans. All right. In secured loans, they having the flexible collateral submission. Okay. But in unsecured loans, they do not have any collateral submission norms. Okay. So you could say that the NBFC provides a loan on both the cases, secured and the unsecured. It's totally depend upon which thing? Depend upon the credit worthiness. Okay. It means that if the CIBIL score, what do you mean by the CIBIL score? We will discuss it into the lectures of credit rating agencies. Till then, just remember, if the CIBIL score is good, the loan could be issued even on the unsecured basis. But if the CIBIL score is not as much good, the loan will be issued on the security basis, but in the terms of flexible collateral submission, which is not available with the banks. Okay. So students, basically in this lecture, we had finished till the collateral flexibility. In the next lecture, we will continue from here. Till then, just revise all the facts and figures we have discussed in this lecture. Be ready for the another lecture. With this note, let's end this lecture, and what we say thank you.